Hey guys, Gold Streams here. So I want to talk about this trade that I took pre-London, so today, the 3rd of February. See this beautiful market structure appearing on gold. This is the 15-minute time frame. So we had gold creating a session trend, a bullish session trend, moved up quite a bit, came down, created support, and then the next 15-minute candle came up, closed bullish just above previous resistance, right? So as it closed just above previous resistance, we waited for the candle to flip bullish. We had our entry, which is obviously the first green line there, and then candle kept moving up. Secured partials 90% at 16 pips, and then put stops at break even and let the candle run. Now on the 30-minute structure, this was breaking of sort of a resistance on the 30-minute structure as well. On the 1 hour structure, this was just continuation of higher highs and higher lows being made. Now, what's significant about this trade? It's basically you have to look at various different time frames to understand, taking an entry like this. So this entry made sense on all the time frames because the 1 hour was bullish, the 30-minute candle, 30-minute time frame was bullish, and the 15-minute time frame gave you sort of an entry point, right? So the 15-minute candle came down, you created support, it respected candle lows, it closed just above resistance there, literally like a pip above resistance. But once this candle flipped bullish, we was able to take our entry. Stops went below the previous 15-minute candle, which was also the 30-minute low at that point, right? And expecting price to move up. Constantly keeping in mind how I would have managed risk if this candle sort of broke the high and I entered the trade and it came down and it broke its own low, then I would have closed 50% of the trade. I wouldn't have closed the whole trade. I would have only closed 50% of the trade, but it didn't. It was the perfect trade. No zero drawdown at all. The minute I entered the trade, I think it stagnated for about a pip or two, and then it just continued up. We had the full TP to be taken sort of at the top of the candle on the left hand side. You can see to fill in that clear range. Before we go into that problematic area, unfortunately, this ended up being a break-even trade. But because it's the first trade of the week, right? It's a Monday. But I'm expecting a lot of volume to come into gold this month and seeing some really big moves into gold this month. It's why I secured 90% at 16 pips, right? Made my 2%, put stops at break even, and let it run. So I was more than comfortable with 10% of the trade hitting break even, and me being sort of 2% up on the account already. So overall, it was a fantastic trade. After this trade was taken, so the minute this trade sort of hit break even, I shut everything down, and I closed everything down, and don't look at the charts anymore. That's the whole motto. You take one trade to two trades. Your goal is to get a winning trade. That's what you aim to do. Once you have that winning trade, or once you take your one or two trades, or use your maximum risk for the day, you stop trading. There's no point of coming back and looking at the charts, just to put yourself in that sort of danger zone of coming in and seeing like, oh, what can the chart do on the New York session? Let me see how it's going to move at NYC Open. Let me see how it's going to move on London Close. There's no point of that. You're just going to sort of open yourself up to possible trades. And if you've made money, say pre-London or London Open, then you come in and lose money on New York Open, or NYSE Open, you know exactly how that feels, because I'm sure a lot of traders have been through that. It doesn't feel good. So it's very, very important to stick to your rules. And my rule is very, very simple. If I take a trade in the pre-London, then and I win that trade, or I used my risk up for that day, I don't look at the charts anymore. I'm not interested in what the market does. I'll have a look at the charts at the end of the day in the evening, sort of as a downtime, just to see sort of how it moved and see what possible setups it did give us. Because obviously it's something that we do on a daily basis. It's an interest of us, to us. But you don't want to be sitting there staring at the charts all day, because you're not going to be able to stick to your rules of 1 to 2 trades. It's going to be very, very difficult, right? You don't want to give into the temptation. And the only way to stop yourself giving into temptation is obviously by cutting the temptation out. So whatever it is tempting you. So that's why as soon as I take my trade, I make my money, I put stops on break even. Then, as you can see, the mouse isn't even moving anymore on the screen. I've walked away from my PC at this point. I've just left the screen recording software on for the sake of it, and it does what it does. But anyway, guys, you will see that this trade came down, hit break even, and we'll obviously be looking for the trade tomorrow as well, same time, pre-London, coming in and seeing what possible setups there are. One thing I want to add is because of the news that's going around at the moment with the US putting sanctions and taxes on Canada or on China, there's going to be a lot of volatility. It's going to be a lot of volume. And I would say that patience will pay you these couple of months. And, you know, volatility and volume is very, very good for a trader if you can be patient and if you can stick to your rules, right? But if you can't stick to your rules and you're taking 10, 15 trades a day, then unfortunately it's gonna kill you. But yeah, have a good one, guys, and obviously look forward to doing the next video.